All right, ladies and gentlemen, you're back tuned in to the Evening Watch List Report with yours truly, Dex the Algo Capitalist. Let's jump right into it. So we had the FOMC today, and he didn't do anything with the interest rates. He left things alone. And the market reacted the way that I anticipated, and we had a little bit of a rally going on, nothing really big to write home about. And if you look here at theta, it actually broke that support, this key support zone. Therefore, the acceleration to the downside is going as anticipated. The next target is the old support down here at 87 cents, folks. So, yeah. Moving along, we have ZEC or Zcash also getting ready to come down here and test the 52-week lows. So, look out for that. And then we have XRP Ripple giving you more downside production today too, threatening to take out this key support here. And below that, you have nothing until you get to 35 cents, folks. And then 29 cents respectively. Ouch. Next, we have silver. It broke this support zone that we were talking about last night, right? Broke it. And so now you are free falling on your way to 26. That's the psychological support zone, followed by 24, followed then by 22. So right now, 26 even is the downside target. Next, we have the Dow. And the Dow right now is hanging on by a thread. All right. We have the bearish trend momentum reading, which is a sell the rally mode. However, we have this bullish algo shift that's helping to keep the price propped up for now. And the overhead resistance zone here at 38.8 is the key resistance zone for the market. So 38,800 is resistance. So the market has several hundred points that it can, oscillate between and still not be at a critical point. You need to close above the 38,800 level in order to put in a short-term support bottom to rally from back toward the 40K mark. So it has a lot to work out as of this point, but the market still has a bearish overtone. Next, we have the NASDAQ 100. So we had the crash alert coming into the day. You got a little bit of downside production. You still have the bearish trend momentum reading as well. And you have bulls trying to come in on an intraday basis and defend this key support zone down here. So it's going to be interesting over the next 24 to 48 hours to see who's going to win this tug of war. Will the bulls be able to pull a rabbit out of the hat, or the bears going to come in and swoop and sell the rally? Next, we have gold. Gold still has that bearish trend momentum reading, still broke this key support area. 2,200 is the next downside target, and we'll see where we go from there. But 2,200 is now in play for gold. Next, we have the E-mini S&P 500. We got that negative bot check yesterday. Didn't really see any major downside production today, but this bearish trend momentum reading is still there. You still have the bullish algo shift too. So there's a tug of war going on here within the within the Kumo cloud of consolidation here. So we'll see who wins the tug of war here over the next 24 to 48 hours as well. Then we have oil, which came down big today, broke that key support area deeper into the Kumo cloud. 75 is your psychological support that is also now in play. Next, we have the euro. Still has a bullish algo shift, still has a bearish trend momentum reading, locked in bear market. And maybe the bullish algo shift can help keep the price propped up for now. But then you got this negative bot check, this also a ticking time bomb. We know a down leg's coming, so you still got to look out for that. Next, we have the pound sterling. Same thing. We got a negative bot check on the close. So, yeah, we know a big down leg's coming here too, which means the dollar is bound to get stronger. The Aussie also came down a little bit more today. Still struggling to get back above 66. And right now, it's even struggling with 65. I don't know how much longer this bullish trend momentum reading is going to remain intact because the bulls keep struggling to keep the prices elevated. So this consolidation range here is just widening. Next, we have the Russell My Hustle, which is the weakest of the stock indices, still has a bearish trend momentum reading. We had the crash alert coming into today, got a little slither of downside production. Market has a real problem with 2K. Maintaining 2K is a big issue. And because we're in sell the rally mode, I have the sneaking suspicion that the rally will be sold. Like I said, the next 24 to 48 hours is going to be very important. And this wee little support down here will probably be tested and taken out. 1900 seems to be a very key critical juncture for the Russell moving forward. Next, we have the Ethereum futures, and we have had a crash alert coming into today. You got that downside production, and now we have a crash alert for tonight into tomorrow's trading, as the support level here did not hold. It failed. So downside we go. I want to make a notation here. And you've heard me talk about this before, but some of you have not, so I will do so yet again. When we're talking about securities that have indexes and have futures contracts associated with said indexes, the markets are going to key off of one another. So in this scenario, we have, like, let's take the S&P 500, for example. We have ticker SPY, which is the ETF for the S&P 500. It tracks with the E-mini S&P 500 futures contract, okay? Now, here's what you need to know. These two entities key off of one another. The futures is supposed to be the leader because futures contracts take into account factors that the equity market doesn't necessarily take into account. When we talk about commodities, there's storage costs, there's insurance, there's things like that, transportation costs, all that stuff. Now, because these are stock index futures contracts, they're not like traditional commodity futures contracts like cocoa or corn. You're not going to get 5,000 bushels of corn dropped on your doorstep. These contracts are settled in cash, but the principles still apply. The market principles will still apply. All right. So in this scenario, you'll notice that the futures markets really don't have any gaps in them. The only time you may see a gap in the futures contracts is during contract rollover period. So the front month contract may be lower than the next front month contract, or vice versa. The front month contract can be higher than the next contract. So you see gaps that way. But the equity market always has gaps because it doesn't trade 24/7 like the futures does. So with the impact of that understanding of market dynamics, we carry that over to the crypto side. The crypto side is a little bit different because it never stops trading. It trades 24/7, right? But what they have done in these crypto markets and with these exchanges, they have documented times of closing, if you will, to rotate on a 24-hour period. Now, with that, the futures contracts still have closing times to mirror that of its futures contract counterparts like the S&P, the Dow, crude oil, etc. So what will happen is you'll have gaps per se in the futures contracts per se, because the crypto trades Saturday and Sunday. It keeps trading. When the futures markets close on Friday evening, the crypto market is still going. So if Bitcoin or Ethereum explodes over the weekend, and let's say they're, hundreds of dollars, if not thousands of dollars higher than where the futures market closed on Friday, then when the futures start trading again on Sunday night, they're going to rally to reflect that. Okay. So in that regard, the the cash market will have an effect on the futures. Okay. Now it works the other way around as well. So let's say between Sunday night and Friday before the end of trading, the futures is leading now the cash market on the way up. What will happen is 9 times out of 10, as the crypto market is still trading, it's going to try to catch up to that futures contract at some point. So, like I said, they key off each other. Switching back to the first scenario with on the equity side, the SPY will have gaps. It will have gaps because it doesn't trade 24 hours like the S&P futures does. So if the S&P futures contract gaps down on the open or gaps up on the open, or let's say it doesn't gap, it just, it opens where it closed, but starts moving lower or starts moving higher, then you're going to get those gap up and gap downs on your S&P ETF, the SPY. So yes, you use your indices to key off one another. All right. So that's how you know. Now, here's a little secret. All right. Our pulse waivers know this because we teach it in the tutorials. If the futures market is leading the cash market on the way up, that means you can expect for the rally to continue in the cash market until it catches up to the futures price, and it works vice versa. If the cash market is leading the futures on the way up, you can stay long your futures contract because it has to catch up to the price of the cash market. So that's how you do it. All right. You always take inventory to see where the cash is versus the futures market, see which one is leading. If the cash is leading on the way down, the futures has a lot more downside to go to catch up to the cash. If the futures is leading the cash market on the way down, then the cash market has more downside to go to catch up to the futures. That's how that works. All right, capiche? So yes, you can key off of these markets in that way. All right. The Bitcoin futures right now, unlike the Ethereum futures, so it came down. You don't have a fresh crash alert, but you did take out this key support, and you stopped short right here at the bottom of the Kumo cloud support. It stopped short right there. And so now we're going to see, will the bulls come in and defend this key area and cause a technical bounce? If so, then I suspect the Bitcoin will probably not go down any further tonight, and will probably get a technical bounce between tonight and tomorrow's, by the time the futures market closes tomorrow, setting up the sell the rally to take the market back down and try to get it below the Kumo cloud. So yeah, very interesting dynamics as the price action is now in this wide Kumo cloud of consolidation. We'll see how things go, but it's not looking as bearish as Ethereum is coming into the tonight's trading. And last but not least, the US dollar index has given us a rally alert. Now we know that this upside is coming because we had this positive bot check back here a few days ago. So now that we're getting a confirmation that this dollar is ready to run, we have a rally alert for tonight into tomorrow's trading for the US dollar as it manages to get back above the 106 level. 108. Remember what I told you guys last night, what levels to look for with the dollar and what the scenario is going to look like for the country. If you missed last night's video, you should go back and watch that after this one, because I give a lot of information in that video. All right, folks, the attack reports are out. They're up on your dashboard. When you log into pulsewavetrading.com, you will see it, especially the DEX'S watch list. All the charts that you see me go over, excuse me, in these end of day videos, these watch list reports, they're on DEX'S watch list when you log into your dashboard. All the securities that I talk about are going to be on there. Okay, I did that for you. As you know, I'm not. I don't necessarily trade all of those things every day. I pick and choose which securities I'm going to go. I try to find those that have alerts on them, rally alerts, crash alerts, etc. Primarily, I like to stick with the futures contracts. I like those better. They're more feasible. They're more liquid. I can get in and out anytime I want, no problem. And I like Forex too, for that matter. On the crypto side, I really don't do as much, or haven't been doing as much, because I'm having a whole lot more fun on the future side. So, but I will at times do that. There are even times where I will do some equities, but those are few and far between. That's only when, tantalizing opportunities arise that you can't ignore and you have to take advantage of it. So, but apart from that, the watch list is what I'm doing. So I'm going to make some determinations. I do see some potentials, excuse me, for tonight. I haven't put on anything yet because, like I told you before, I wanted to wait for the dust to settle from the FOMC to see what we're going to do. So I will be putting out notifications once my trade tickets are in. That way you'll see what I'm doing. So I will alert you guys once I'm ready for that. All right, you know what it is, man. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And on that note, I'll see you guys in the next one. In Pulse Waivers, I'll see you guys in the trading room and on our Discord. Smash that like button. I'm out. Peace.